Good afternoon, everybody. Thank you for coming to our second installment of the Film Nevada workshop series. We're going to talk all about Nevada film tax incentives today. There's a lot of information. I'm Danette Tull, Deputy Director of the Nevada Film Office. I'm here with Kim Spurgeon, Director of the Nevada Film Office. We are part of GOED, that's the Governor's Office of Economic Development. And we're going to go ahead and dive into the nitty-gritty. So, Kim, how did the history of the incentive program begin?
Yeah, so to get started from the beginning, a little history of the film tax incentive program that we have here in Nevada. It was initially passed during the 2013 legislative session, and it went into effect January 1st of 2014. It was initially passed as a 4-year pilot program funded at $20 million annually, for a total of $80 million in commitment from the state for that 4-year period. As some of you may remember, that was not very long-lived. September of 2014, the Nevada State Legislature called a special session, which was commonly known as the Tesla special session, where they passed SB 1, which as part of that economic incentive package to get Tesla to build a battery factory in northern Nevada, it included $70 million of our program's $80 million in funding, leaving our program with $10 million over the 4-year.
Yes.
Yes, so there was a lot of misunderstanding at that time. A lot of people interpreted that as Tesla dismantled the program, but technically at the time, it was simply unfunded. We had that $10 million remaining. It was exhausted by applications by the end of 2014. So over the course of that 1 year of funding that we had, $10 million, we had 10 productions apply, take all $10 million, leaving the program technically intact, but unfunded. So we had no funds to award. And then, let's see.
So 2016 was a good year. It was fun for us.
In 2015, as you may or may not know, our legislature meets once every 2 years. So when our funding was out in 2014, we had to wait until the 2015 session in order to introduce a bill to refund the program. During the 2015 session, there were actually 2 bills that were introduced to make changes to the tax incentive program. One was known as a corrective bill, where it was simply just taking some aspects of the program and tweaking them to hopefully make it a better program and easier to use. And one bill was to refund the program. Well, the bill that made the corrective changes passed, and the bill that was going to refund the program did not. It did not pass that session. It was a rather contentious session, let's just say. And unfortunately, it didn't pass, leaving us unfunded again for the next 2 years. So in 2017, another bill was introduced to refund the program, and this one passed. So at the time, it was $10 million in annual funding. Any unused funding rolls over. And from that time, we have actually not exhausted our $10 million in funding for any fiscal year since it was reintroduced in 2017. The last time any changes were made to the law was in 2021, when again, we just made some corrective changes, small things to hopefully make the program work better. And that's the current iteration. There have been no other changes made to the program since 2021. That's what we currently have with the $10 million in annual funding our fiscal year begins July 1st. So we actually have new funding coming to our program very shortly here on July 1st, and of the unused funds that have rolled over since, we currently have around $43 million for new productions to apply because those funds have not been exhausted.
I'm going to piggyback on something you just said. If I could just recap everything you said, the main takeaway that I want you to have is that we do have a tax incentive program. It never got cut. Tesla didn't take it all away. I hear that a lot floating around the community, and all it does is damage us when I hear people say, we don't have a tax incentive because Tesla took it. Not true. We have one. We've had one since then. It's still currently funded at $10 million a year, and that's the main takeaway that I want the public to have. So let's go through the basics of the tax incentive program.
Yep. So the nuts and bolts of the program. In order to qualify, production has to spend at least $500,000 in qualified Nevada spend, and at least 60% of the production's overall budget has to be spent on that Nevada qualified spend. Now, that 60% calculation can exclude post, like if you're doing all of your post out of state, that can be excluded, but the 60% has to include your pre-production and production costs. And the reason for that is we want you to film most of your production here in Nevada with us instead of just using the incentive for the Las Vegas unit that you were going to film here anyway. We want the whole production here. Let's see, our base rates. We offer a tax credit of 15% on all of your qualified Nevada costs. That includes your Nevada resident labor above the line and below the line, Nevada vendors, services, anything that qualifies as a Nevada business. Can earn that 15% credit. In terms of non-resident labor, above the line non-resident labor is qualified at a reduced rate of 12%, and non-resident below the line labor does not qualify for our program. We do have 2 bonuses available, an additional 5% if greater than 50% of your below the line crew are Nevada residents. That is calculated based on hours worked, and it specifically excludes extras. So Nevada extras don't count towards that bonus. It's just below the line crew, resident, non-resident, and if you exceed 50% in resident crew, you get an additional 5% bonus. We have another bonus of an additional 5% if greater than 50% of your filming days occur in a rural county. And our law is worded a little funny in terms of what qualifies as a rural county, and I'll just sum it up to say, as of right now, every county is considered a rural county except for Clark. So any production outside of the Las Vegas area, the greater Las Vegas area, can qualify for that incentive if greater than 50% of the filming days occur there. We have a few compensation limits. No one individual can earn, well, I shouldn't phrase it that way. We don't incentivize earnings greater than $750,000 to any one individual. And we also have a limit on the amount that we incentivize producers. So it's calculated at, we take your total Nevada qualified costs, and then 5% of that number is the cap applied to your non-Nevada resident producers, and 10% of that total is the cap for your Nevada resident producers. And you don't have to worry about doing the math on that. We have worksheets and the auditors that will do all of those calculations for you.
Regarding the Nevada crew, where would a production find such a person?
So one of the many services offered by our office is we maintain the Nevada Production Directory on our website. It is the main resource that we use to connect productions with the local resources they need when they want to film here and take advantage of the tax incentive. And that happens often. When a production wants to apply, they want to use local crews so they can capture that bonus, so they can get more incentive dollars. But we turn to the Nevada Production Directory. So if you are a crew member in this audience wanting to learn more about film incentives, let me tell you that if you want to get hired by these productions, list with us so that when they ask us, who do you have for art department or camera department, we can tell you, here's all the people who list, these are the connections you need, and that's how you'll get the phone calls.
In theory, if a production were to meet the minimum spend, plus the 2 bonuses, they can potentially get up to 20%. 25%. 25% if they meet the other 5%, the 2 bonuses. So
yeah,
something to consider if you film in Washoe County. If you want to do a production up in Reno, you could get the base 15, the 5% rural bonus, and then if you meet the below the line crew requirement, you could get up to 20%. So it's a nuanced. It's not like when we go to these trade shows and we're next to Kentucky and New Mexico. It's not just 15%, 17%, 20%. Ours is 15 up to 25. But we market it as a base of 15. That's why you need to call the Nevada Film Office to find out this information. So what you're saying is, let me just take one step back. Every time a production is interested in applying for the tax incentive, they call you,
yes.
Right? And every time they call us, they ask about crew and vendors, every single time. We are a state agency. We're not allowed to refer, recommend, or endorse, even though many of you are great and we're friends with some of you. We're not allowed to do that as a state agency. What we can do, though, is refer them to the website and the crew database and let them choose from there. To list in the directory, you need 1 working credit, a paid credit, from a crew position that you have worked on, not a passion project or a student film. You need to have a paid credit to list under your qualified category. Your listing is good for up to a year. And it happens quite frequently where they ask us, who do you have for this and who do you have for that? And we go and we're like, there's only 2 people in that category, and I know there's at least 12, so help us help you get employed, right? Okay, so let's go through the application process.
Yeah, so there are a lot of steps that you complete as you work through the incentive process. The first step, of course, is to submit an application. This has to be submitted to our office prior to the start of principal photography. That is key. If you submit after, we can't help you. And it can be there is a timeline in terms of when you could submit prior to principal photography, and that's up to 90 days prior to the start. We don't want you to apply and then things happen and you don't have a firm start date with only $10 million in funding. That could get eaten away very quickly to productions who just want to try to hold on to it until they're ready. So we make sure you're ready to go when you apply for that money, because we do set it aside for your production once you apply. Part of the application, let's get into that. The application consists of a PDF that collects some basic information and also lists some additional attachments that are required. An Excel workbook that essentially takes your budget, breaks it down into the different types of qualified expenditures. We look at your Nevada expenses, non-Nevada expenses, above the line, below the line, resident, non-resident. And based on the inputs and what you expect what your budgeted spend is, the worksheet will calculate your potential incentive amount. And this calculated amount is the amount we reserve for your production once your application is approved. Now, once you go through the audit process, you ultimately can't receive a higher credit than what you initially applied for. So we do encourage productions to add a little contingency in their application so that we can account for some of the unknowns that may happen during filming, so that when your audit comes back, you don't exceed that amount you applied for, because it will be capped on what you apply for. Some of the attachments that are required are a script or synopsis of your production, an economic interest statement telling the state why this production is in the economic interest, in terms of how many local hires there will be, what the local spend will be. Those are the things that drive economic development here. What else is there? I know there's more. Oh, proof of financing. So we require you to show at least 70% of your financing has been secured. We don't want to award incentives to productions that can't pay their crew. That's not what the incentive is for. You should be able to do that. And then, let's see, also a proposed capital investment if applicable. And that's something like, if you want to build a studio as part of your investment in Nevada, it would cover that. Most productions don't have that aspect. It's just a simple film or TV series, and that usually doesn't apply. There are different types of productions that can qualify for our program. The standard feature film, TV series, or a TV episode, reality TV, talk show, game show, commercials, music videos, documentaries. Things that don't qualify are current events or news programs. Sporting events don't qualify, and neither do things like award shows. And then after we receive an application, we'll be required to hold a public hearing. The public hearing is a required part of the process where we essentially read the details of your application into public record. As you are applying for public funds, the public has a right to know where those funds are spent, and this applies to all state spending. It's all public information. If you want to dig deep enough, it's all out there, and this is no exception. So this application is considered public record. We have some authority to be able to withhold certain data as confidential, as perhaps business trade secrets, where Like the script, if you send us a copy of your script, we can typically consider that confidential because you wouldn't want that to get out before your production is released. It could damage the commercial viability if that script is released. Or, the compensation limits page. Say you have a star that is highly paid and we need to calculate for the purpose of our cap, how much in excess they're being paid of that $750,000 cap. Well, as a production, you probably don't want to be released how much one person makes. You don't want those contracts to get out. So that's typically something that we can consider confidential as well. So in terms of getting that public hearing scheduled, there are certain laws we have to follow within the state. It's not just for this program, it's for a lot of things that this open meeting law requirements apply. We have to schedule at least 10 days in advance from the time we receive your application. We have to give the proper notice to the citizens of the state that this meeting is taking place. And then the documents are also posted on the website, so I want everyone to be aware of that. There are certain pieces of the application that get posted publicly on the GoEd website and are available, and sometimes we have reporters who go in there and find something of interest, and then we get a knock on our door saying, I want more information about this. So while it's understandable that productions want to keep a lot of their dealings under wrap, when you apply for state funds, that is something that gets opened up as a possibility where you're going to have to disclose certain things and that information is considered public. And it's not just in Nevada that that's true. A lot of states have these types of requirements. So after we hold the public hearing, your application can be officially approved. And at that time, you're free to film in Nevada. Hire your local crew, spend money with local Nevada vendors, film at local Nevada locations. Save all of your receipts because those are going to be required as part of the audit, which happens after you film. Once you're done filming, the audit is required. Every production that has applied for our program and continues to apply will be required to have an audit performed by a certified public accountant approved by our office. We have a list of, I think, 6 CPAs currently approved to work with our program. You'll contract with one of them, and that option is up to you. You can contract with any one of the 6. And they will review your books, make sure that the money you spent, you actually spent, that the money you spent was on actual Nevada crew with actual Nevada vendors. If they find that someone doesn't meet the requirements to be considered a Nevada local resident or a Nevada local business, they will disqualify those amounts. And that will affect the total amount of tax credit the production will ultimately receive.
I have questions.
Yes.
Can I interject now?
Yes,
Okay.
please.
She covered so much that she covered a lot of the questions that I was going to ask, but I'll ask some to just recap some of the information because there was a lot there. And maybe you covered it, forgive me. Did you say what does proof of financing consist of?
Oh, the proof of financing requirement. Thank you. So back to the application process where you have to prove 70% of your financing has been obtained. That can be in the form of a production agreement letter from a distributor, foreign pre-sales, some kind of document that shows the dollar amount this entity is giving to the applicant entity. Another kind of strange thing that our law allows is if it is a publicly traded company applying for the incentive, a corporate credit rating of lower, medium grade, or higher can qualify you for that proof of financing requirement, but that typically only applies to the major studios. And even some of those don't have a corporate credit rating of lower, medium grade, or higher, if I'm being honest.
There's going to be a quiz on this, guys, after. Question about qualified expenses. Can you go over one more time? What's a qualified and what's not qualified?
So to give you an example of some of the things that are qualified, for instance, a Nevada business is defined in our law, and in order for a vendor to be considered a Nevada business for the purpose of the incentive, they have to have a physical location in the state, at least one full-time equivalent employee at that location, and be registered to do business with the Nevada Secretary of State. So those are the benchmarks that we look for. So it can't be a business from out of state who has a P.O. box, for instance. That would not qualify as a Nevada vendor for our program. Things like flights. Flights can qualify if you use a Nevada travel agent to book that travel. Hotels qualify as long as they're in Nevada. Per diem actually qualifies if the associated labor takes place in Nevada. So even the below the line non-residents whose wages do not qualify, their per diem does qualify because the assumption is they're going to spend a lot of money while they're here in Las Vegas. It's the nature of our city, and we want that money. What are some other qualified costs? What are some not qualified
You're asking
costs?
me, you're the oracle of tax exempts. I'm trying to think. Well, you already
You know,
covered
things that don't qualify for their program are marketing or publicity.
Yeah.
So if you have any of those associated costs with your production, those don't qualify for our program, no matter where you spend them.
You said extras, background extras.
They
Right.
qualify. I mean, they have to be Nevada residents, but they qualify.
I don't have any more questions about that, but in general, how difficult is our application process compared to other states? What would you say?
I don't have a ton of experience with the application processes of other states. It's the hard part of our application. If you're not a numbers person, the incentive calculation worksheet can be tricky to make sure that those inputs are in there correctly and we're capturing your anticipated spend. That's the hardest part. Otherwise, it's just supplying us the documentation, telling us what you're trying to do, and that's typically not as hard.
And Kim is very, very hands-on. So if this process intimidates you or you have questions or there's an error in your calculation, she will find it and tell you about it and help you every step of the way if you need help or you have questions, because we want your production to be successful and we don't want to waste our time or your time. So it can be intimidating, but please feel free to reach out to Kim for help.
I have 2 productions right now emailing me with help on their calculation worksheet, as well as helping them determine what does or does not qualify for the incentive. So if you do have specific questions on, hey, does this vendor qualify? I can help you determine that.
Okay.
All right, back to the audit, I think. So the audit has to be completed within 270 days of principal photography if post is excluded from your application, or within 270 days of the completion of post-production if you are performing your post-production in Nevada. We can extend that period by 90 days if needed, but we cannot extend it further than that. So basically from the time you wrap, you have a year to complete your audit, and if you don't complete your audit in that time, you will not get your incentive. So please take that process seriously.
Or if they don't, if it goes through the audit and something doesn't add up, like literally, you will not receive the tax incentive either.
And that's something that has happened in the past, where if the production does not meet one of the minimum requirements of our program, and those minimum requirements are at least $500,000 spent in the state and at least 60% of your overall budget spent in the state, you don't receive any tax credits at all. Even if you came and spent a bunch of money, those 2 benchmarks aren't met, then we can't issue the credit. And then once your audit is complete, our office will initially certify the audit. So we'll review what the independent third-party auditor has determined, make sure there are no red flags or anything like that. And then we will approve the audit. Then the production will receive what we call a declaration form. And that is what determines the tax type the credit will be used towards. So the credit, and we'll get into this in a little bit, can only be used towards certain tax types. And that is printed directly on that transferable tax credit certificate we issue once you have earned that final credit. It says this credit used towards this tax type. So we have a little form that you fill out that says this is the tax type, and at that time you'll need to be in negotiation with a broker to determine that tax type, because your seller, or I'm sorry, you're the seller. The buyer is going to tell you, I need it for this tax type. And so that's when you'll need to be able to be in negotiations with whoever is going to buy it from you.
I have a couple questions.
Uh-huh.
I know you're so excited to move on. Question about, from my understanding, the process in terms of getting the credit, the certificate of credit, is somewhat faster than some of the other states. From what I understand, there are some that have to do something with the taxation and when your taxes come, and it's like a year or 2 before you can even start thinking about getting your credit back. I mean, the production's moved and gone on and been released in the theater, and they're still waiting for their credit to come. So Is that a correct statement to say that ours is a pretty quick turnaround?
I think that segues perfectly into our next
Look at
slide.
that. And also, you don't need a broker. That makes our state a little, also another, selling point in this apples and oranges discussion. You can actually sell directly to a buyer. You don't need a broker to do that, and you would get a better price on selling direct to a buyer.
Yeah. So this gets into how our tax credits work. So ours is a transferable tax credit, which means that the entity earning the tax credits typically can't use them themselves. So they have to sell that credit to a Nevada business who can use it. And I will clarify, you can't sell it to a business outside of Nevada. There's some confusion. This is a state tax incentive. And I have been asked if like someone in Chicago can buy it. The answer is no. This is a state tax incentive. It's not a federal incentive that can be used on your own personal taxes. It's only for certain tax types, and each state is set up this way. This is for our state taxes, not anyone else's state taxes.
So I want to make sure that I understand this because I'm not a technical person, and I always use this analogy. If you're a shopper, right, and you get a gift card to the Nevada store, you can only spend this gift card in the Nevada store, right? Not any other store.
Right.
Okay. Just
And
clarifying.
yes, and only on certain tax types. So our credit can be used towards the gaming license fee due monthly by the casinos. The modified business tax, which is a payroll tax that businesses pay on wages that they pay in Nevada. The insurance premium tax, which is a tax on insurance companies, and the bank branch excise tax, which I'll be honest, I'm not sure what that is. It's never been used towards that. It's some kind of financial institution tax. So of those taxes, those are all paid either monthly or quarterly, which means that there's a year-round marketplace for these credits to be transferred or sold to a buyer. As Danette mentioned, in other states, you either have to wait to the end of the calendar year to file business taxes in that state to be able to get their tax credit, creating an even longer timeline to be able to monetize it. But with our program, due to the quick turnaround of how quickly we can get the audit approved and get the certificate issued, and you can get it sold because there's quarterly or monthly taxes due by Nevada businesses, it's actually a fairly fast process to be able to monetize that credit. There are other states where they get really backed up in terms of issuing their credits. Last I heard, I think New York State was 2 years behind in all of their tax credit issuings, where you can get yours in Nevada within 45 days.
And what have you heard is the selling rate? What have you heard that's selling for?
So you'll get a tax credit that is worth a certain dollar amount, but it's not worth that certain dollar amount to you because you need to sell it. And the buyer isn't going to pay the full market rate for that credit. Why would they? Like, they could just pay the state of Nevada the taxes they owe. They're going to pay you a reduced rate for that credit. And we usually see that transfer rate at around 90 cents on the dollar, where the buyer will sell or will buy the credit for 90% of its value from the production selling it. So that's how the production monetizes the credit, is they'll receive a check from the buyer, and then the buyer will work with either Gaming Control Board if it's being used towards the gaming license fee, or taxation for any of the other taxes. Those departments from the state side will then take over with the buyer and help them redeem those credits during their monthly or quarterly tax filings.
So in comparison to other states, 90 cents on the dollar is probably up there with the best.
And we use that as a base rate. You know, we don't want to overpromise and then have the reality be lower. So typically, I have seen productions get a little bit higher rate than 90 cents on the dollar. And surprisingly enough, brokers tend to get a higher rate than what the private market sells. So not a bad idea to shop around with some local brokers, and I can put you in touch with those people too. I'm here to help you make this credit succeed. So I can put you in touch with brokers who are familiar with our credits, with buyers who have bought the credits before, and help you get that sold. And also, the tax credits expire 4 years after the date of issuance. So we don't want these credits kind of sitting on the state's books for a long time. So they do expire after 4 years, and they don't have to be used all on one tax return. So if someone pays monthly fees, it can be split up month over month. So a lot of states have some kind of tax incentive program, and they all vary greatly based on what the different states offer. So some states offer transferable tax credits, like Nevada. Some states offer what acts like a rebate or grant program, where you would get a check from the state based on your qualified audited spend. Some states, like Indiana, offer a non-transferable tax credit, which is typically not worth much of anything at all because productions typically don't owe taxes, so it's hard to be able to actually use it if it's not transferable. So there's a lot of different approaches to these tax incentive programs. I believe around 37 states in the US have some type of program, and there are over 100 programs worldwide, because this is not just a United States thing. It's in Canada, it's in Europe, it's in Asia. It's all throughout the world, the different types of tax credits that are available, and that's why you hear a lot about productions filming in foreign countries like Spain or the UK. You know, those both offer. Ireland is another big one.
Malta.
Malta
was big for a while.
They're in hot water. But yeah, there's a lot of different countries that offer these types of programs. And they all kind of compete with each other, you know. When a production decides where to film, they're gonna look at two main things. What does the creative call for? What's the story? Where does it take place? And what are the tax incentives of where the creative fits? What's the tax incentives like in that area? And is there a better area or a different area with better tax incentives where we can cheat that look? And here in Nevada, I think a lot of us are a little salty towards New Mexico, perhaps.
We're very salty.
Because you know, that is a landscape very similar to ours with a much better tax incentive program. So we see a lot of productions, you know, Army of the Dead, The Cleaning Lady, just to name a few, that technically take place, their creative is Las Vegas based, but they are filmed, well, that's in Southern California.
Oh, Southern California. Still.
But yeah. So yeah, so there are a lot of different states, a lot of different approaches. And this landscape, it's constantly changing. So this graphic is accurate as of last fall, and it's already changed because recently Delaware actually passed a very small program, but technically Delaware is now part of the incentive club. And states like Michigan and Wisconsin both have bills currently in their legislatures where they're trying to either create new or introduce old legislation, you know, in the case of Michigan, where they're trying to get back in the game.
Yeah, you'll see, I mean, if you put in an alert in your Google search or whatever for film tax incentives, it's daily. I mean, I get the daily who did this and who's changing this program and what program didn't pass and what they're trying to do. I will say, as she's saying, the landscape changes with, you know, almost by the minute, it feels like. It also changes with who's the governor. So if, you know, Sandoval liked something and Gibbons didn't like it, or, you know, whoever, the governor can completely cut the program altogether. So a lot of it is determined by who's in leadership at the state at that time. And the landscape from, 25 years ago has changed because there were no tax incentives until, late 90s?
Around 2001, I believe, is when Louisiana introduced their program.
So if you think about every single film that you know that's shot in Nevada, I mean, there's a ton. There's all those films that you know about, like Casino and, you know, Mars Attacks and Leaving Las Vegas and Fear and Loathing in Las Vegas. There's a whole bunch. I can go on and on and on. Those were filmed because we're a destination. We're production destinations. They were shot here because the script called for Vegas. We had the locations, and those were the decisions that were made at the time were based on the location, what the script called for. And now those decisions are based on the financiers and where they get the most bang for the buck. That's why, yeah, we have desert locations. Could we be Mexico? Yeah. Could we be Star Wars? Could we do something that Jordan can do? Yeah, we could, technically. But Jordan offers something ridiculous, which is why Star Wars goes and films in Jordan, the country. But yeah, and on that note, to another question, why is Nevada's tax incentive program transferable instead of a rebate or transferable or refundable or any of that? There's all these different colors. Why are we pigeonholed into having a transferable tax credit?
And that's determined at a state level. So that typically productions tend to prefer the rebate or grant approach because it's dollar for dollar. Every you know, tax credit earned is paid out at that face value. That, from my understanding, is not ever going to be an option in Nevada. People keep trying because that's what's desired, but this is determined at a state level. When the incentive was first created, it was determined that this would be a transferable tax credit, even though transferable tax credits didn't exist in Nevada before this one. This was the very first program ever, and only a couple have followed since. Based on our state's tax landscape, this was determined this is the approach we're going to take, and it's not likely to change. I mean, people have tried, but I don't see it happening.
Well, the other states too, if you start really digging into it, will have, a cigarette tax and a logging tax and a blueberry tax and they have a lot more tax revenue than our state. So we're already starting off as a tax-friendly business climate. And so that's another thing, that's a nuanced comparison. When you go to these shows, you'll see it's like a used car lot. It's like this state has this percentage and this state has that percentage. And we're there with our little tears rolling down our face about our program, trying to sell Nevada next to these other, really competitive programs. But that was just one thing to keep in mind is the tax
Here's a
climate.
fun fact that I just learned recently is that in Georgia, the incentive awarded for things like hotel rooms and per diems are limited to the GSA rate. And I don't know if you guys know much about the GSA rate. It tends to be pretty low, and especially in a place like Las Vegas where room rates can go really high based on demand. In Georgia, those poor auditors, they have to go through and determine what the GSA rate is and then disqualify any amount above that rate. But here in Nevada, if your Nevada qualified business gives you an invoice for this is the amount, as long as that what they're charging you for is typical within the course of filmmaking, and hotel rooms certainly are that, then that full amount qualifies for our program. So there are a lot of nuanced things like that where certain programs don't allow that type of qualified costs, or other states do allow this. Most states do allow some kind of non-resident labor for below the line to qualify, whereas ours doesn't. A reason for that is that Nevada has no income tax. So in Georgia, they're collecting 5.25%, something about that, for any labor, whether it's resident or non-resident labor. The state collects that in taxes based on those wages. In Nevada, we don't collect that because we don't charge that. And that's an off-the-top savings to productions that film in Nevada compared to other states.
So this is the reason why when you get a question about the Nevada tax incentive, why you shouldn't try to answer it on set or at the crafty table. This is why you need to refer people to our office, because there's a lot of nuance to the program and it's not just black and white. There's a lot of gray areas like what we're talking about now. So you can't just say, well, our program's 15% and that's it. See you later. I mean, there's a whole bunch of other little
There's
caveats.
a lot of considerations. And in terms of, the states that offer a program, not only do those types of things vary, but also the funding level provided by each state varies significantly. On one end of the spectrum, I'm sure Georgia has an uncapped program. So last year they awarded, I think it was around 1.3 billion in tax credits to qualified productions. And that is a huge number, especially when you compare it to our 10 million that we
Wait, no
have.
cap? Wait, no cap?
Oh my God.
I'm sorry, Gen Z, anyone? Gen Z, cap, no cap? Sorry. No, I had to do that. We did a whole, who's on first about it the other day. What was I saying? So in other words, no cap means that the state has no capped amount on the money that it will lend to the program. So if there were a bazillion, trillion, million dollars, Georgia would be like, okay, we're fine with that.
Based on the current law, yes. So they have tried to cap that program previously. Just a few months ago, in the spring legislative session in Georgia, they tried to introduce a cap, and that bill failed. The legislators voted not to cap the program in any way. And there are other states with large programs like Georgia. So New York was funded at $420 million a year, and they recently increased their funding to $700 million a year. And a lot of people thought that was
And what was ours again?
What?
What was ours?
10? A lot of people thought what New York did was in response to what New Jersey did during during COVID. They passed a bill that had a total of $300 million in tax incentives that could be applied to productions in New Jersey. And so there is a level of competitions where states look at each other and say, okay, what's that state offer? What's this state offer? How can we compete with everyone across this landscape? And then you have the other end of the spectrum with states like Indiana or Colorado funded at $5 million a year. So that is less than our 10. But of the states that have a program, very few offer less in annual funding than Nevada's at our current $10 million a year.
In other words, we're toward the lower end of the spectrum, is what you're saying?
Yes, yes.
So that pretty much sums up how that works. That's why when you get triggered every time you see the Georgia peach at the end of the credits, like I do, that's why you see so much Georgia peach and not as much Nevada Film Office. That's because it's just they're killing us with the uncapped. Why do you suppose, I mean, maybe you don't know the answer, but why do you suppose our program is on the lower end of the funding spectrum?
Part of the Nevada Constitution requires that when the legislature meets every 2 years and sets the state's budget for the next biennium, that budget is required constitutionally to be balanced. And these tax credits, because they're transferable, show up as negative revenue on our state's balance sheet. So this program technically does cost the state money. And in order to allocate $10 million to this program, they have to figure out where that fits in the state's total budget. So could we have an uncapped program in Nevada? I don't see that happening because they can't accommodate for that. They can't accommodate for X when X is unknown. And in order to increase the funding, we have to figure out where that money is coming from within the state's budget so that it can be balanced when the legislature finishes meeting at the end of the session.
Fun story, really quick, about Georgia. I'm watching the time, but will you tell everyone how their tax incentive program began? I think this is an amazing story, and it just shows what kind of support they had at the time.
So this happened, I believe it was around 2005, when the biopic Ray, about Ray Charles, famous Atlantan person, had the biopic come out with Jamie Foxx. They filmed that in Louisiana due to the tax credits. Louisiana was one of the first states in the US to offer some kind of film tax incentive program. And there was a famous scene where Ray is on the steps of the state capitol building. And in Georgia, it is a famous gold dome that is the capitol building. And they were not on those steps. They were on the steps of the state capitol building in Louisiana. And when the Georgia lawmakers saw this, they were so personally offended by this atrocity that they didn't actually film in Atlanta, that they passed the tax incentive program that Georgia has today.
So I just thought that was a fun little story.
So going back to the states, so New Mexico, I do want to point out, we've talked a little bit about them. They take a bit of a hybrid approach with their funding. They have $125 million available for any production to apply. Any production that wants to film in New Mexico has access to $125 million a year. But then they also have designated studio partners, and these are private companies who have committed to a certain level of investment in the state of New Mexico. It started with Netflix taking over the old Albuquerque studios, investing tens of millions of dollars in taking those over. And as a result, they now have access to uncapped funds. So they have the one pot of funds for everyone, and then they have one pot of funds for their designated studio partners, and that's up to 3 different companies now. 3 companies have met the qualifications the state determined to be considered a studio partner, and any productions that film at those locations can have access to uncapped funds similar to the Georgia program.
So what happened last session, Kathy?
Yeah. So that goes into kind of the approach that SB 496 had for our state last session. So you probably heard a lot about the bill that was introduced at the end of the last legislative session last year. That was SB 496. I'll go over the approach of that bill. So that was designed to make significant changes to our current tax incentive program. And it divided it up into essentially 3 buckets of funding. Zone 1 was associated with the development of infrastructure at the Harry Reid Technology Park, and any productions who then filmed on that infrastructure or that campus would have access to $95 million in annual funding. And then Zone 2 was the land out by R.C. Willey in Summerlin. There was a proposal for a studio campus to be built there, and any productions that applied at any productions that filmed at that studio space would have access to $80 million in funding. And then it allowed a certain amount of funds for any other production filming anywhere else throughout the state. And that it's essentially the current program, but expanded, and they expanded it from 10 million to 15 million for that bucket. So if you combine those 3 buckets, it was $190 million in funding per year to cover all of those areas. And the bill also had a term of 20 years. So that, I think, was very scary for Nevada for Nevada lawmakers, seeing a $190 million bill year after year for 20 years. That becomes a very expensive program to run and maintain, and I think that was pretty frightening. Even though, if you compare that funding level to other states, it's not completely out of line. It's not an unreasonable ask compared to what the industry is looking for.
Also, side note on that, our office was not involved in that bill in drafting it, writing it. It didn't come from our office. Please don't ask us, why did we do this and why did we do that and why didn't it pass? We don't know. It wasn't our deal.
Yeah. So that gets into kind of, how did that bill come about? That bill came about through private interest, working with a legislator who could sponsor a bill. That's kind of how bills get made. And before we move on to the next slide, I do want to address some current events. So, this bill, it didn't pass. And, while we may see something similar next legislative session, it won't be exactly like this bill. But the 2 private entities involved in this legislation, they are both still around and both still in the news and making waves in terms of what they're looking to do here in Southern Nevada. For instance, in Zone 1, a couple weeks ago, there was a press release issued by UNLV that their research foundation had approved, I think it was an architect firm, to contract with to build the studio campus at the Harry Reid Technology Park. And that group is working with the Bercher Development, as well as the MBS group has now partnered with them, and they are calling themselves, let's see, the Nevada Studios Campus Project. So that's what's being proposed at UNLV. And Senator Lang, Senator Roberta Lang, who did sponsor SB 496, she has indicated in a recent KNPR interview that she is still working with this group, that she plans to introduce similar legislation next session in 2025. So we do expect to see something there. And I'm sure you also heard about the Clark County Zoning Commission meeting that was attended by Howard Hughes and Sony. They wanted to get that land out by Summerlin rezoned to allow for the construction of and operation of a studio on that property. That made big waves because the zoning passed. Clark County commissioners all voted a unanimous yes. And people interpreted that as, oh, they're going to build. That's not entirely true. During the testimony, the CEO of Sony, Tony Vinciquerra, specifically said, and this is public record, you can go back and watch the video to listen for this quote. He said that Sony is prepared to spend hundreds of millions of dollars in Nevada if the state makes changes to the film tax incentive program. And any changes have not been made until next session. So while you may hear about studios building and you think that they're definitely coming, that's still TBD. We still have to get through next legislative session, see what changes are made to the incentive, and based on those changes, we would expect or not expect to see investment from those private entities.
It's all contingent upon this legislation passing. Much like the film productions you hear coming in, don't get excited until you see a permit pulled. You know, how many times we hear like Harry Potter's going to film in, you know, Pahrump and Summerlin's coming and or whatever, Star Wars. It's like
It was Star Wars. And
Star Wars was coming here too at one point. No.
So we tell you this in order for you guys to know what to pay attention to next legislative session, because it all hinges on that. And as a reminder, we would like to share a little video with you.
Wait, before that,
Oh,
I have an introduction. I have an
what?
introduction to this video.
That's right.
So, Kim, Danette, Nevada Film Office, why aren't you guys doing something to change the film tax incentive program? What are you guys doing? I mean, we're just sitting around here getting hammered. What are you going to do about it? Why? Why isn't it changed? What are you doing? Why are you guys doing it?
Well,
Nothing. Why do you don't do anything?
I assure you that we do our best to advocate for the industry, try to get jobs for our locals, try to get business to our local businesses. But we also are not a regulatory agency. We don't have much authority, really, if in the grand scheme of things. We can't just decide that a law should be written, and it's written.
We would have improved it by now, guys. For anybody watching at home, just click the link below to the video we're about to show. You're welcome for that little earworm. So we just wanted to simplify that. I didn't see any film commission anywhere in that process. So.
Yeah, so we play that for a bit of levity, but also it's true. The process that our little bill friend follows is the same on Capitol Hill as it is here in Nevada, only here the governor has the veto power as opposed to the president, but bills die in committee, and that means that committees are formed with our local legislators. That's where the bills originate. They're first heard in committee. They have to get through committee and get passed in committee, then they go to the full assembly or full Senate. So it depends on where the bill originates. If it's an SB bill, that means it's a Senate bill. It starts in the Senate and then has to go to the assembly. If it's an AB bill, that's an assembly bill. It starts in the assembly and then it has to go to the Senate. And every bill has to do this. They have to go from committee to full assembly and then committee to full Senate. And then as long as it gets yeses on all four of those different votes, then it goes to the governor to sign, and only does it become a law when the governor actually signs it.
And how long is the session? Like February to May, with hundreds of bills, hundreds and hundreds waiting.
Our legislative session, it's a marathon run at a sprint's pace for our legislators. It runs each odd year from February to June, usually the first week of June. And that's it, unless the session gets extended, and our legislators try very, very, very hard not to let that happen because it costs money if the session doesn't end on time. That's why a lot of bills die. If they don't have all four yeses by the time session ends, then the bill does not pass. It does not get passed on to the governor to sign. It dies, and that is what happened with 496 last session. So what I would like to explain a little bit to you about is NELIS, the Nevada Electronic Legislative Information System. This is a website. All you have to do is Google NELIS, N-E-L-I-S. It's something like ledge.nv.us.
Not two L's, because it'll take you to the Air Force Base.
Right, not two S's, just the one S. This is a clearinghouse of information for anything legislative related. It covers the current session as well as past sessions. So you can actually go back and look to see what committee meetings SB 496 was actually in. You can go back to the 2013 session and see who voted yes and who voted no for the law when it was first passed. It has daily, once we are in session, it has a daily calendar of all meetings scheduled to happen that day. Every meeting, committee meeting, or full assembly or Senate votes, all of these are live streamed, and all of them have the recordings uploaded at later times. And they even, it's a feature I personally love, they bookmark once the recorded version is up there. So if you're only interested in one part of the agenda, you know, one law that's on an agenda of 5 different bills heard that day, you can scroll to the part that's relevant only to you once that recorded video is up. So you can see what questions were asked by what representatives, and I encourage you to know what district you're in, who your representatives are, because for this matter, if you're concerned about whether or not Nevada has a film tax incentive.
Please don't call our office.
This is the role of our legislators. These are the people you need to talk to make this happen. So you need to know who your representatives are, make sure that your voice is heard, and there are a lot of ways that you can participate in the process. You don't have to go to the state capitol and testify. You can submit public opinion by writing something in and having it become an exhibit for a meeting. You can call in, you can go to either the physical location in Las Vegas or in Carson City. Every meeting will have a stream link down here, so you don't have to travel up north. You can if you want to. Sometimes it's good to get that FaceTime with your representatives. But also keep in mind that during session, they're extremely busy. It's a lot to be a legislator in terms of when you're in session. But right now, when we're in the election season, they want to talk to you.
Oh, yeah.
Now's the time. Find out who they are, find out who's running, find out if they are an incumbent this year and don't have to run. Just find out who they are and make sure that they know what your opinion is, because they are your elected official and speak on behalf of you. So I encourage everyone to take these steps to make sure you know what's going on.
Yeah, if you're a voter, that's constituent services. They have to respond. You email them, you reach out to them by phone, by email. They have to respond to the voting public, do they? Maybe they don't, but they'll still have a record of your opinion, right?
Mm-hmm. And also, when we are in session and, say there is a bill introduced that would make changes to the tax incentive program, every bill will have this little public opinion survey where you as a registered voter can submit like, I am in favor or not in favor or neutral. And every little bill has this little pie graph of what the public thinks about it. And the legislators do pay attention to stuff like that. Something that has a lot of interest or has a lot of noise around it, they pay attention to that. I promise they do. And we share this just so you're all aware. Any studio infrastructure investment that you may have heard about, it's not a done deal, and there's still a lot that needs to happen in order for that to become a reality. So stay vigilant, stay informed, make sure you know the process, know what happens next, know what still needs to happen, and make your voice heard.
There's a countdown actually on our website, isn't there, about how many days till the session begins? And it's like on GoEd's website.
Maybe.
Something they were talking about making it, but the countdown, you can track it as soon as the bill's introduced. You can follow it all the way to see what it's going, the House, the Senate, whatever, to see how it travels. Here's our contact information. Please don't be strangers. We're probably the most accessible state agency there is. We do take appointments now.
So please just give us a call or an email and let us know that you want to meet with us, and we'll set up a good time for you to do so.
That's it. Thanks for coming, guys.